we're expecting that Kingdom Finance is going to be part of our fintech ventures at North South University,
Sure.
and
So
you should take it forward, Red.
Now, we're
Kingdom is,
interested for that.
I think this counts as a global call, because if we have Bangladesh and China, we can genuinely say it's a global conference call. So that's good.
Yes, yes. It is an international one.
National call, yeah. So okay, let me try and share my screen and start. Let me see. How do we? Okay, slideshow. Okay, so thank
go
you.
for the full screen.
Yeah, how do I do that?
F5.
F5.
Control F5. Control F5.
Control F5. Connect. Oh, I don't know what it's doing. Okay, give me 1 second. Cancel. It should just be. Let me stop share. Let me try again, and let me make this
full screen.
Yeah, full screen now, and come back here. Okay, let me try again. Share screen. And then view slideshow from the beginning. Okay, full screen. Okay, thank you very much, everybody. Hopefully you can all see the screen. I will apologize in advance because I'm basically going to go through these slides very quickly. It's like, I think 60 slides, but effectively I'm trying to give you 10 lectures in one lecture. So since you're faculty, I don't think we have, I mean, I will share both the slides and also I wrote a 30-page paper on a technology roadmap for Bangladesh's capital markets. I'll also share the presentations and also the research report. So let me start. We have Toby on the call, who's my partner at Kingdom. So Kingdom Kingdom Technology is $10 billion fintech company based in Shenzhen. They have $1 billion revenue. They have almost 8,000 employees, of which more than I think almost 5,000 are software developers. They're in all of these areas. They've built Yaobao, which is Alibaba's $200 billion plus money market scheme. They also built NUCC, which is a central payment system for digital payments in China, which is the biggest in the world. And 50% of all brokers in China are using Kingdom's online trading platform. So I think it's good that Kingdom is kind of a founding strategic partner of the proposed NSU FinTech Center. And you can see Kingdom Technology shareholders include some of China's technology giants: Tencent, JD.com, Hong Kong Stock Exchange, and Peng An. Maybe in the question and answer, we'll also have a chance to have Toby in the discussion. So before I actually talk about FinTech, I thought I'd try and make it a bit more topical by talking about Ant Financial, Ant Group. So their IPO was just cancelled, and this can be one of the case studies for a proposed lecture series that I'm happy to give. So just before the IPO was cancelled last week, Ant Group was valued at $320 billion, which was bigger than JP Morgan. So if you wanted a figure to show the potential power of FinTech, a FinTech company was valued at more than the highest valuation bank in the US. It would have been the biggest IPO in the world, bigger even than Saudi Aramco. And this is Ant Group. Unfortunately, Jack Ma probably said the wrong thing at the wrong time. And in China, one thing you can't do is upset the Communist Party, especially if you upset Xi Jinping, then things don't go well for you. So I think he criticized regulators publicly. But I think that there's a more general regulatory battle between the fintechs and the banks. So fintechs have grown dramatically because of light regulation, especially in China. And now the regulators are beginning to look at fintechs in a different way. So this is the kind of, I'd say, very topical, like right now, a case study that we can show students and get them excited. In fact, after this regulatory intervention, Ant Group's valuation has fallen from $310 billion. Now it's estimated to have halved. So it's gone from $310 billion to $160 billion. Like that, $160 billion of valuation disappeared. So that again shows the impact of potential regulation. Maybe later on we'll have some discussion. So what is fintech? So I think many of you and maybe certainly many of your students will probably just think fintech is Bcash. Either students have no idea what fintech is, or if they may say, okay, fintech is Bcash, maybe they'll think it's Nogod if they're a bit more. But fintech is actually about how technology is disrupting the whole financial system. And so in this slide, we're showing fintech is affecting payments. So digital wallet, we've heard lots of, I mean, Bcash and many banks, there are probably 30 digital wallets now in Bangladesh, Rocket and others. And we have different kinds of payments, eKYC using biometrics and so on. Another area is insurance. So insurance tech is another whole different area, and maybe that will be a potential lecture in this program. Deposits and lending. So beyond payments, fintech is disrupted and transformed lending and how you lend and how easily you lend, and even what's called P2P lending. So P2P lending is where an individual is lending money to another individual through a technology platform. And I think to some extent you could say that even in the villages in Bangladesh, there is P2P lending. I mean, you have a money lender sitting in a tea stall. If you need to borrow some money in the village, you probably go to your money lender in the tea stall. But what P2P lending platforms, Lufax and others have done is to move that onto a technology platform. Capital raising has been transformed by technology. So crowdfunding is another big area of dramatic growth. And again, each of these can be separate lectures later on in the in fintech program. Investment management, so investment management and wealth management. Wealth tech is another huge area. So robo-advisors, online trading, and so on. So you can see this is a slide from McKinsey about how digital finance is changing how we do many things, from how you receive your salary to how you pay your bills to the government, how you do your shopping, even how you borrow money, and so on. And this is another slide from McKinsey. It shows that McKinsey is estimating that fintech or digital finance could boost global GDP by $3.7 trillion by 2025. So as an economist, fintech's not just some kind of something happening out there in technology. It actually has the potential to boost economic growth dramatically. So that may again be an interesting lecture or discussion. How does fintech affect economic growth, and how does fintech affect benefit growth, inclusive finance, and so on. And McKinsey's estimating that fintech will create 95 million new jobs by 2025. And incidentally, I mentioned when we met at NSU that McKinsey is also forecasting that within 10 years, 60% of all commercial banking jobs will disappear. So as I was saying to you last time, if your students want to know one good reason why they should be interested in this new fintech program, probably for their own self-interest and their future, job marketability. So I think that many of the NSU students would want to go into banks and be fintech savvy. So maybe a lot of their senior management are not fintech savvy. And these new students can be the people, or MBAs or executive MBAs can learn a lot about fintech. So here I'm splitting it, fintech into sort of different modules. So you have, blockchain analytics, deposit lending, payments. And here you can see we have some of the technologies or concepts, and here we have companies who have made money from payments. For example, TransferWise is the biggest digital remittance company in the world now. It's worth $5.5 billion. And TransferWise has, in the last less than 10 years, has gone from zero to a $6 billion valuation. And they focus on the remittance market. So, we can again have a discussion about how not just Bcash type domestic payments, but how is fintech revolutionizing and transforming remittances, which is a very important sector for Bangladesh. and what is the future likely there. So we talked about investment management, robo-advisors. RegTech and SupTech is another important area. So, how banks and other financial institutions meet their regulatory requirements is being affected by technology. And SupTech is supervisory. So like BSEC or Bangladesh Bank or Finance Ministry, how they supervise the banking sector or the capital markets, that's again being transformed by technology. So that may be another potential discussion that we have, or potential lecture. So again, to make this a bit more topical, one of the core concepts, I'd say, in fintech these days is what's called the digital wallet or super app. And here you can see that we were used in Bangladesh to seeing Bcash, cash in, cash out. You go to, you would go to your local Bcash agent, give him 1,000 taka, he'll send it to a different part of the country or whatever, and that's a very narrow definition of fintech. But what we're increasingly seeing is super apps. So this chart shows a financial super app. So it's just in the financial sector. So many things can be done from this super app or digital wallet. And this shows from Alipay, has payments, wealth management, insurance, credit scoring, consumer lending, all within the same app. Now, the relevance of this for Bangladesh is now Ant Financial has invested $120 million in Bcash in 2018. So this is not something that's happening in China, not relevant for Bangladesh. This is Bcash and Ant Financial's core strategy is to create a super app for Bangladesh. And so their ability to do that is also going to be limited by the regulators. Bangladesh Bank, Ministry of Finance may not want Bcash to have that kind of latitude to be the super app. So again, that may be an interesting case study. How what is the outlook for Bcash and how is it going to create the super app? And you can see here in China, the two super apps are Alipay and WeChat Pay, or the Ant Financial and WeChat and Tencent. And you can see here how all of these things, when we talk about super app, from calling your Uber or Patao, ride hailing, dating, social media, gaming, mobile gaming, music, streaming, everything is in one app. So in the US or in Bangladesh, we have Spotify, or we have Uber, and we have this, we have that. We may have 10 apps. In China, everybody just uses one app, either Ant Financial or Tencent, WeChat, and that does everything. And that's likely to be the trend for countries like Bangladesh. So in the future, you do everything. You book, holiday tickets, travel, restaurant bookings, food delivery is all coming from your super app. And this shows
beggars asking for money by QR code. Yeah. They don't accept the cash.
Yeah. So as Toby was saying, in China, China's become so cashless that if you try and give a beggar some money, a beggar will not take any cash on the street. They will give you a QR code to scan and say, can you scan the QR code? Cash money is not good enough. So you can see the world of the cashless society. So that's where Bangladesh is heading. But here you can see again, Alibaba, Tencent, all of the different, education and food delivery, grocery shopping, electronic shopping, financial services, everything, insurance is all from one app, super app. Even, we go onto Netflix now, or we go to PayPal, we go to Amazon, we go to X, Y, and Z. But in China, everything is through one of these two platforms. So, and here we have, you can see again, the different subcomponents of the fintech universe. So wealth management, payments, wealth management, internet wealth management, insurance, online lending, consumer finance, crowdfunding, digital banking, credit scoring. And, say, for example, take another interesting case study for Bangladesh will be how the insurance sector is going to be disrupted by technology, what you call insurance tech. So Zhong'an Insurance, in its first year of operations, it was China's first internet-only insurance company. In its first year of operation, it did $600 million of business to 150 million customers. So you can imagine an online insurance company, the first year of operation, reached 100, wrote 600 million policies to 150 million customers in its first year. That shows, and it became one of the most valuable insurance companies in China, in the world, in fact, in year one. So how is that going to change Bangladesh? And this slide is a little bit busy, but this is from a Goldman Sachs report. And again, if you look here, it's showing, payments, personal lending, SME lending, crowdfunding, savings investment, cloud computing. These are all the Chinese companies in fintech space. These are the US companies, and these are the Japanese companies. The main message is the largest amount of fintech innovation, the largest number of startups and unicorns in fintech is actually in China, not in the US or Europe. And here you can see in this next slide, P2P lending market booming in China, and how Ant Financial is also lending money. So the next section is banking. So I think what I would also say is that this presentation and the next presentation, the next section on capital markets, these are presentations I've given to banks in Bangladesh. So if we think about one of the objectives of our proposed FinTech Center, it's to be talking about things with the faculty, but with your students or with an executive MBA. These are not abstract things. We're actually talking to 10 banks, and we're giving the same presentation to the bank management that we're giving to your students. So I think you can't get more relevant because we know it's live. So here, this is from World Economic Forum. There's a very long report, like a 100-page report from World Economic Forum about fintech. I can share the link with you later on, but this is just showing, in terms of banking, all of the functions of banks, from payments, deposits and lending, capital raising, investment management, these are all being affected by fintech, disrupted by fintech. And here, I mean, this is from a US report, but it's just showing, the whole thing about fintech is people in Bangladesh think that, okay, we see an app, maybe it's City Touch or something like that. It's about the app, but actually fintech is also about reducing costs. So 60 to 70% of the benefit of technology in banking is actually in the middle and back office to reduce costs. It's not about just the customer experience, because if you reduce costs of doing things, you can offer customers a lower price, or a lower lending rate, or a higher savings rate, or you can offer money management for much lower fees. And that's where the disruption is coming from. So here you can see in the case of deposits. So a fintech like Zupa in the US is able to offer higher interest rates than the typical bank because their cost base is lower. For lending, Lending Club is able to offer loans at a lower interest rate than a typical bank because it's accessing the money directly from other consumers or from individuals. And Betterment is doing robo-advisor, insurance, and so on. So I mentioned TransferWise. TransferWise remittance cost is 0.5%. Traditional bank remittances before, like Western Union, MoneyWise, they were charging 4 or 5%. So you can see how an Alipay's payment is 0.7 to 1.2%. PayPal and credit cards are charging merchants 1.5 to 3.5%. So fintech is compressing margins, reducing costs. Now, again, bringing back to another case study, which you can do. I mean, I would hopefully do in the fintech program, is actually about banking. And my bank. So when we think about Ant Group's, Ant Financial's $310 billion valuation, a big thing was 310. 310 is 3 minutes to apply for a loan on a mobile, 1 second for a credit decision, and 0 human intervention. Now, we know in Bangladesh, when you want to go and apply for a loan in Bangladesh, how long does it take you to fill in the paperwork for the loan? And how long does it take the bank to reach a credit decision? It's weeks. It's weeks. And in China, my bank is offering loans in 3 minutes, from application to decision, 3 minutes. Now, you might say, again, Ifty, this is all very interesting for China, but what's the relevance for Bangladesh? It's very relevant for Bangladesh, because actually Kingdom, we are discussing, and other companies are implementing 310 with banks in Bangladesh. So for example, you may have read in the newspaper last month, 2 months ago, Citibank, bKash reached an agreement to make 10,000 Taka loans based on instant credit decision. And so it was Citibank and bKash, but the underlying AI, the artificial intelligence algorithm, was coming from Ant Financial, because they have a lot of the algorithms and analytics to take this credit decision. And the data about people's credit history was coming from bKash. So Citibank, bKash, Ant Financial. In the background, IFC so now there's a 10,000 Taka pilot scheme. So if somebody can get a 10,000 Taka loan almost instantly using their bKash history, that's a huge change. There's another company I'm working with in the UK called Rev Technologies. Actually, it's a former NSU graduate, Erfan Kandakar. I'll get him to give a lecture as well. So he's developed, his company, Rev Technologies, has developed a instant credit decision based on mobile phone data for Robi. So Robi is now offering handset financing based on your mobile number. So it's taking geolocation data, your top-up history, your spending history, that Robi has 40 million customers to form a credit decision. Again, think about how transformational that will be. You know, there are 40 to 50 million people in Bangladesh who don't have any bank account. So if you could, if for SMEs and for individuals, if we can form an instant credit rating based on their mobile phone history, on the mobile phone number, that will transform Bangladesh's economy. So again, something will maybe for a lecture. So how do you come up with AI credit decisions? You have structured and unstructured data. So structured data is things like e-commerce data, mobile phone data, tax data, ERP. This e-commerce data, again, one of Hanan Bai's former students, Afif from ShopUp. So ShopUp is offering an e-commerce platform, but partnering with BRAC Bank to give a loan based on SME's e-commerce history. And that's what Alibaba's done. But other people like Tencent, which is the kind of Facebook and WhatsApp of China combined, Tencent uses social media data to form a credit decision. So that's what we call unstructured data. So there are different ways to form credit decisions. So this can be another area of discussion. And Kingdom prepared this this project for Sichuan province. So Sichuan, they delivered this SME lending platform to Sichuan province, and this has a combination of AI credit rating. It takes tax history, it takes telecoms data. So this was done jointly between Kingdom and China Mobile and the Sichuan regional government. Sichuan province, by the way, has 80 million people, so it's not a small province. And so, again, what we're trying to do is take some of this technology, risk management system, so credit decision, credit fund disbursement, credit risk management, and bring this technology to Bangladesh. How can Bangladeshi SMEs, individuals, companies benefit from this technology that's been implemented in China? Let me just flick through here. I've talked about some of these things. Okay. So moving on to the next section. I don't know, Hannah, but do you want to take questions as we go along, or do you want me to go through and take questions at the end? What would you prefer? I think you're on mute, Hannah.
Go ahead, Ifty. You can continue. Then eventually my colleagues are going to ask questions and share their also point.
Yeah.
It's a good idea to take the question.
Okay. So this is a presentation I mentioned to you that I've given quite a few presentations on fintech, both to clients at different conferences in Shenzhen a couple of times last year, in London in February of this year. So this was the discussion in London. And I was presenting to 150 people at the Houses of Parliament, with the Honorable ICT Minister and Mona, the High Commissioner, Her Excellency Mona, and Senior Secretary of Financial Institutions Division. And there was Shopap and Nogod and others were there. I was telling UK fintechs why they should be interested in Bangladesh. So one is I was saying that Bangladesh can be a laboratory for fintech. So as we develop new ideas like Bcash and ShopUp and other new SME innovations, then they can be developed for Bangladesh market, but also implemented in Africa, in other developing countries. Secondly, Bangladesh can be a data laboratory. You know, when you speak to AI scientists, the thing that they say is the most important is not the AI algorithm, is getting high quality data. Now we have 170 million people. That's a lot of data. And that data is relevant for fintech, it's relevant for the healthcare sector, for education sector, for many e-commerce, for many sectors. So we have a lot of data here. So that's interesting as well. And I mentioned before, I mean, we have different kinds of structured, unstructured data that's going to go into what we call a data lake and help to develop more intelligent AI systems. So this is not a little bit unclear, but what this is showing, I think this is again from McKinsey, is showing different kinds of services from fintech, and also listing different companies in different parts of the world. So there are many, I mean, payments, of course, Alipay and WeChat Pay are very big, but there are, you know, Paytm in India is also partly owned by, is again another Alibaba company, and M-Pesa in Kenya. So there's many different examples. The reason I'm showing this, and this may be again another lecture, maybe it's in our digital innovation lab more than fintech, but we can look at all of these business models and what has been successful in different countries and see what makes sense for Bangladesh. So our young students and entrepreneurs can get more ideas and more food for thought about new business opportunities. Another thing that's very important from a kingdom perspective is establishing the digital payments infrastructure. So it's not just about the apps and the wallet and everything else, but if you don't have, it's like the financial plumbing, if you think of it that way. If we don't have efficient digital payments infrastructure, then this system will not work effectively. So that's another area that Bangladesh Bank and Ministry of Finance and BSEC, the regulators, have to think about very carefully. So let me just flip through. So this next presentation was one we gave at an event. The BSEC chairman was there, and we gave a separate presentation to Shibli Rivert, the BSEC chairman. And again, when I talk about this, it's not an abstract discussion. We're actually engaging with the regulators and with the DSE and with many brokers, as well as banks, about digital capital markets transformation. And this presentation is summarizing a 30-page report that I wrote in the summer. So I will share that report with you. You'll feel free to share it with your students as well. So there's, again, maybe I'll go through it very quickly. There's probably 3 or 4 lectures within this short presentation here. So on capital markets, I mean, interestingly in Bangladesh, markets closed for almost 3 months. But in the rest of the world, stock markets were booming. And why was that? Because Bangladesh did not have an online trading system that was effective. One interesting statistic I gave to all of the DSE brokers and to the BSEC chairman, you know, China has 1.35 billion people, 160 million retail investors in the stock market. So China has almost as many investors in the stock market as Bangladesh's whole population. And Bangladesh currently has 160 million people, 2 million BO accounts. Actual investors in Bangladesh's stock market is not even 200,000. But if we have the same proportion of investors in our stock market as China, we should have 20 million investors in our stock market. So we have 200,000 now, the potential is 20 million in the next 5 to 10 years. That's one of Kingdom's key focuses. So for many of your students who are going to be working for banks, for brokers, how can we see technology disrupting the capital market? Now, if somebody says, yeah, but that's China, Bangladesh is, you know, that's not realistic for Bangladesh. Look at this chart. This shows that in 2015, you know, the Chinese stock market was booming. In 2015 was the boom year. In 2015, China was adding 3 million new online trading accounts per week. 3 million per week. So Bangladesh has 200,000 in total. China was adding 3 million a week. But the reason I look at this, you can see here, the blue line is showing the number of new accounts added, 4-week average. Now, the reason I show this is this shows what is possible in Bangladesh. I don't say it's inevitable, but if somebody tells me there's no way that can happen in Bangladesh, some people are saying the same thing in 2010 in China. No way can China catch up with the US in online trading. It's impossible. But now, the Shenzhen Stock Exchange, and Shenzhen, as you know, Shenzhen and Shanghai are the strategic partner for Dhaka Stock Exchange. Shenzhen Stock Exchange is the highest turnover stock market in the world now, even more than NASDAQ and NYSE. So there's a lot we can learn. And you can see globally, 45% of all trading is online. In China, 95% of all trading in the stock market is online in China. This is a bit, you know, I mean, I think when we talk to students, or indeed when we talk to regulators or companies, we need to go from first principles. What is the purpose of a, you know, if I think about fintech or technology, you have to start with what is the purpose of a bank? What is the role of a bank? And in this case, what is the purpose of the capital market? What is the capital market there for? Before we get lost into the technology and the complexity of fintech, let's try and understand what actually is the purpose of a stock market. And a stock market and a capital market is there to be an intermediary between people with surplus savings and people with surplus investment requirements. So you have individuals or companies who have excess savings, and you have companies who need money to invest. And the stock market is meant to be the platform to bring surplus savings and surplus investment opportunities together. So sometimes in the Bangladesh stock market, we forget that. And here you can see the underlying structure of capital markets, and maybe this will be a separate lecture in our proposed program. I was saying, so savings, financial intermediaries, capital markets, companies. Now, this slide here, it's a little bit busy. I think it's broken to TCS. This shows how technology is affecting the whole life cycle in financial markets. From technology and AI is affecting, I mean, AI, this is in particular AI, is affecting research. So even how equity research is done in the US is changing and around the world. So AI is able to absorb news and information much faster than individuals. AI is affecting research. It's affecting how you engage with customers. It's affecting trading. So there's a lot more automated trading now. So increasingly, the kind of people you've seen on Wall Street who are buying and selling stocks and bonds, they're being replaced by computers. And even clearing and settlements is being affected by AI. So, I mean, this is a little bit of a busy slide, but we're again showing how is AI and big data analytics changing how people operate in the capital markets. You know, I mean, in China, everybody's trading from their smartphone. Nobody goes into physical branches anymore, or hardly. So how is that going to change? And things like, you know, you see here, RPA. RPA is called robotic process automation. Kingdom has a whole division just for RPA. And RPA is also affecting increasing the efficiency of banks. It will increase the efficiency of many companies around the world. So we may talk about that as well. Let me move through here. So in China, in Shenzhen Stock Exchange, when Shenzhen Stock Exchange does corporate roadshows, they have something called the 5E Investor Servicing Platform. So all of the engagement between companies and investors and the stock exchange and investors is done online and through your mobile phone. So when you vote in, if there is, say, annual AGMs, AGMs are done online in China. People don't go and vote in person. They mainly vote through their mobile phone. When companies want to give earnings announcements or earnings calls, it's all done through your mobile phone. If an investor wants to contact a company in China, it's done through your mobile phone. And the Shenzhen Stock Exchange and CSRC, China Securities Regulatory Commission, they force companies in China to respond to investors. So even roadshows are done online. So we'll be bringing some of that. VNext platform in China, we have Shenzhen Stock Exchange has a platform with around 17,000 Chinese institutional investors and about 800 companies across 39 countries. So it's a way for using technology platform to link technology startups and technology companies with investors. And we're bringing this to Bangladesh. So last year we launched VNext Bangladesh, and we have a plan with Dhaka Stock Exchange and Shenzhen Stock Exchange to build on this VNext platform, or build a VNext for Bangladesh. And blockchain, LDX is a company in London that I'm working with, and they're now using blockchain for fundraising, a blockchain platform. So I will ask LDX, the CEO of LDX, to give a presentation next year at NSU about how blockchain is being used for fundraising, and how can blockchain be used in Bangladesh for fundraising. And this is an area which Michael Sung is also very actively involved in. So rather than just having a presentation on blockchain or AI, we can have a technical discussion, but how is it going to be useful for companies that want to raise money, or investors, or what is the practical use cases? And this is Yaobao. So Yaobao was developed, it's Alipay's online investment system, and it was developed by Kingdom Group. So in its first year, Yaobao raised $200 billion in assets, again, just through the mobile phone. So $200 billion was raised through the mobile phone in savings and investment. We, this is Kingdom, would like to bring Yaobao type technology to Bangladesh. How is that going to happen? And what is the future? What is the vision for online saving, online investment in Bangladesh? So this can be another interesting topic. And this is Kingdom's trading app that they're developing for DSE brokers. We're actually signing up several brokers from the DSE. You know, we signed up another one yesterday, Shakil Rizvi Securities last week. So we can have a separate presentation about, how do you, the trading app, what does it look like? What is the functionality? And as I mentioned, when I came to NSU, Toby and I have been discussing with Professor Hannan about having also a joint program between the computer science department at NSU and the business school to be able to train engineers, software developers to develop this kind of platform. So Kingdom developers will train NSU students about how to actually build this fintech platform in capital markets. Chatbots is another important area for capital markets. So there are a number of companies in Bangladesh using chatbots. How are chatbots constructed? You know, what is a good chatbot versus a bad chatbot, and what is the future for chatbot technology? And this is the technology roadmap that we've laid out for the DSE, Dhaka Stock Exchange, and BSEC in the next. So the first stage here is the DSE will open up its API, which is basically means that the DSE will allow all the brokers to develop their own online trading systems and will connect together an API. And then you can see different components of infrastructure to build up our client base in the stock market. So let me finish there. I think I've talked for quite a long time, about 45 minutes, I guess. And we made a 15-minute late start, but then hopefully we can have a bit more discussion. And as I was saying, what I think is that we can break down all of this information into 12, 15, 20 lectures, kind of that is relevant and interesting and engaging for NSU's undergraduate students, MBA students, executive MBA students, and also some of these will be interesting research topics for you as faculty. Michael Sung yesterday was saying, we also want to bring in, a good, well-structured teaching program. We want to bring in guest lecturers from academia internationally, but also business and finance internationally and locally. So people like Kamal Kadir and others, Tanvir Mishuk from Nogod, and also regulators can come and present and engage in this fintech program. And then I think that there'll be some research areas. So Michael said, let's say thought pieces. So another area might be on, it's called CBDC, Central Bank Digital Currencies. So China's about to launch its digital currency. It'll be the first major country to launch digital currency. So Michael can come and give a lecture on central bank digital currencies. And should Bangladesh have its own digital currency? And how might that work? So we can have some different research areas that are relevant to Bangladesh. And I think there can be some high quality publishable research that's generated from this. And the last thing I would say is beyond the teaching, both from our own generic teaching, international partnerships with Fudan University or Oxford or other universities, executive MBA and so on. Another key component in all of this is actually the technology startups. So we also want to make sure that the FinTech Center and the Digital Innovation Lab, two different things, actually also leads to new startups, new entrepreneurial activities for NSU students, current students, alumni, and so on. So we can translate all of these ideas into actual commercial opportunities for NSU. So with that, let me stop. And I think happy to take any questions, or if anybody else has some comments, please go ahead. Hanan Bhai, how would you like to proceed?
Jim, I think we should open the floor for asking questions and anything that are pertinent for the discussion today. Anybody wants to volunteer?
Well, I'm here to chip in if that's okay.
Sure.
So, Mr. Chair, this is Helal Ahmed, Professor Economics Department and Director of Economics Research Platform, one of the research centers at NSU. Thank you for a whole new world presentation from me. I'm not a tech-savvy person myself, but I got few things, few thought bubbles, may I say. First thing is about the regulatory learning. I'm sure, Mr. Islam, you know about the saga unfolding in China. So the Ant group meant to be offering IPOs, but regulators stopped it very close to the actual launching date. So that's a big issue, right? So the regulatory regimes probably sleeping on the wheel, but virtual fin world is moving too fast for their capability. That's one thing. Sorry. If I may go on.
If I could request that people who are not speaking, if they could stay on mute, that would be very helpful.
Right, okay. So the second point I have is, I know we're talking about fintech, but if I sort them around and call it tech fin and emphasize on infrastructure, physical infrastructure, especially in case of Bangladesh, when even to send an email in a bank environment, you cannot, you're just stuck, right? The speed of bandwidth and all that stopped you. And basically, I'm sure the technological reality has been demonstrated early in your presentation too, right? We moved from one platform to another. So that's one thing, physical infrastructure bottlenecks, right? These are teasing problems. I know we are looking into the future, but these are some formidable challenges in case of Bangladesh. And at the global scale though, the serious issues emerging between the US and the Europe, all the Western world versus China. There's a serious trust deficit in China's technology in the West, and how it's going to unfold as we move into a globalized fintech. So that's the second thought. And if I may sort of conclude with my third thought bubble is all we are seeing nowadays about the fintech realities, they are backed by the real world. The virtual fintech world is backed by the real world. We see institutions and all that. So moving forward, if we move pretty much cashless and virtual institutions rather than real one on the ground, how it's going to sort of unfold, and how us, the older generations and emerging ones will take that. So I will stop there. Thank you. Would like to get your thoughts on this.
There's a lot of information, but I guess I wouldn't expect any less from a professor of economics. So I'm also an economist by background, you know, yes, absolutely. So as I said at the beginning, it's very interesting, you know, the kind of live regulatory, the battle between a very, you know, the most powerful fintech or techfin. So by the way, the difference between fintech and techfin is not an accident. It's not a slip of the tongue. So techfin is basically, you could say, is large technology companies getting into fintech. So let's say Facebook or Google or Microsoft, they become, like, very interestingly, I don't want to digress, but another interesting topic for maybe one of our, you know, when I say lectures at NSU, I see these as a series of discussions. I can give a short presentation, but I would like it to be a good discussion between faculty members and students. But an interesting discussion is going to be, you may not have noticed it, but WhatsApp has now been authorized to make digital payments in India. So you can imagine if WhatsApp is allowed to make payments in Bangladesh, what risk that poses to Bcash and Nogod. If you can, you know, so as of the last 2 weeks, WhatsApp is now allowed to, the Indian regulators are allowing WhatsApp to make digital payments. So I think that there's a lot of regulatory changes. So that's a tech fin versus fintech. Fintech is more of the you know, company startups that they're using technology for disrupting the financial sector. But I think that the Ant Financial case study is, well, firstly, Jack Ma basically, as I said, he overstepped his mark in terms of publicly criticizing the Chinese Communist Party and regulators. You simply can't do that in China. You know, China and Russia, if you criticize the Communist Party in China or President Putin in Russia, your commercial and maybe actual life is probably on a short leash. But beyond that, I think there's a more substantive issue, which is, I think regulators are, you know, this is kind of a monster that's getting out of control. And this is true in China for Ant Group and also for Tencent. And in the US, there's congressional hearings about the power of big technologies become even more powerful during the COVID crisis. So how do you balance innovation and versus, you know, monopoly power by these technology companies? And Ant Group, you know, they were effectively using 2% capital to make their loans, and banks were having to have 30% capital for each loan. So there was a huge mismatch. So if Ant Group is required to have the same capital for its lending as a bank, its valuation is being halved from $310 billion to $160 billion. So there's a lot of interesting issues there. I think we can, you know, that can be a good case study or a good separate discussion. The other thing that you mentioned is on, you know, China, the emergence of China. So geopolitical rivalries, and I've written quite a bit about that subject. So it's not really about technology, but it's about how geopolitical rivalries are also playing into regional economies. And, but I think you'll also see that in technology space. So, you know, we have China as of last week, you know, and the last few days, China is going to be engaged in 5G and next satellite project in Bangladesh and other things. And that's going to make India, you know, US, India, Japan, Korea more nervous. So I think there'll also be interesting geopolitical dynamics as well, which we can discuss in the future. Just to make sure we have time for everybody else to talk, I'll maybe take some other questions or comments.
Ifty, this is Sharif Hakam, who we met the other day. And again, thank you very much. But there's so much to absorb. I don't know where to begin and which question to ask. But I do want to tell you a story. Yeah, you're running a mutual fund, and I actually had a heavy investment in some mutual funds, expecting it to be liquidated about 2 years ago, and that got extended. So you know what I'm talking about, I think. So, and there were a lot of investors from UK who were very unhappy with that. So regulation, the regulatory authorities, the trust on them is an important issue. I just want to actually ask you the question just instead of blabbering. Some of the numbers you said, the potential. We have only 2 million BO accounts. Actual number of BO accounts is much smaller, actually, because one in but we professors don't invest in the stock market. So it's probably going to be a slower process in Bangladesh to get people interested in investing. Finance students don't get into investing, so who else will invest? So I think there is an awareness creation problem also. Now I'm going to ask you the question on this data ocean you're talking about. I think China has better structured data collection storing system. What is the status of data structuring in Bangladesh, data portability, and data integration? What kind of challenge will that provide? Let me stop at this point to hear your thoughts.
Okay, well, I think the first question about mutual funds, you might say that's a governance issue rather than specifically about technology. But I think since we're discussing establishing a fintech and financial markets institute, I mean, governance in financial markets is very important as well. And regulatory process is important. So that may be a separate discussion, but certainly I would say that's more about governance than technology. And I think that, in terms of extending the mutual funds, I think that, extending the closed-end mutual funds, even though we have a closed-end mutual fund, this is AT Capital, I'm not sure that was the right decision. I think in any case, we'll be moving to open-ended mutual funds. In Bangladesh, the mutual fund sector is not even 3% of the stock market. So technology can also, not just technology, I think technology is one part of, we have to increase, the reputation of mutual funds is not very good. And mutual fund management or professional fund management, there's very little confidence or trust in professional fund management. So I think that we need to improve the governance, improve the quality of fund management, and also increase the confidence of students, of people in the marketplace. But technology is not going to solve all of our capital markets problems. We have a problem of supply. We don't have good quality companies that come to the stock market. We have a problem of governance. So there's a lot of issues in terms of reliable accounts, good quality companies. I think the new BSEC chairman is being quite proactive in dealing with that. So that can be another area of discussion or another lecture discussion we can do in the future. On your other question about data, Bangladesh has lots of data, and I think, yes, it doesn't have the same data that China has. China is the most digitized economy in the world, but Bangladesh is heading in that direction. And every day we get more and more data, but our ability to understand the data and to get the right quality data in the right structure, I still think that's kind of weak. So another potential component of our proposed fintech or digital, maybe it's more of the digital innovation lab rather than fintech itself, is about data analytics. So what kind of data is relevant? How do you analyze data? How do you structure data? I think Kingdom developers can discuss how they look at data, and we can bring in other big data analysts and specialists in different segments. But we have big data in, I mean, we don't have time today, but maybe for a future discussion. I was the co-founder of an AI health startup called MUPE. Hannan Bai can remember I gave some presentations on artificial intelligence in health. I've given presentations on AI in health, AI in national security and in the National Defense College, and looking at AI in different areas. But in health, I'll give you a separate lecture in the future about digital health opportunities in Bangladesh, which I think are massive, because Bangladesh has such a huge number of people in a relatively densely the most densely populated country, that we have huge amount of potential health data. And the question is, what kind of data do we collect, in what format, and how do we analyze that data? So we can have a separate discussion on that in the future. Maybe the next question or comment?
So if I may, Mr.
Please.
Islam, Arif here. Chair, Department of Economics, Accounting and Finance. So one reason fintech is attractive is that it has a lot of potential to restore trust in the system, right? So it's supposed to go a long way in restoring trust in the market, capital market, for as long as capital market is concerned. So as Professor Akram was saying, that the awareness of people is a barrier to the development of our market. In my opinion, it's kind of negative awareness. Awareness is there, but they know that this market can be gamed and can be manipulated. So this sort of negative awareness probably is probably the most important barrier to the development of the market. So in that sense, I believe that fintech will go a long way in restoring confidence in the market. But at the same time, my worry is that if the infrastructure remains vulnerable to human interaction, let's say, I don't know much about it, but it's an infrastructure, let's say smart contract, and let's talk about that mutual fund, closed-end mutual fund deadline being extended. Okay, so we write a mutual fund, it's a smart contract, and can somebody intervene in the end and then again extend that, even when it is on fintech? Is it a possibility? I don't know if I could convey my concern.
No, yeah, I think that that's reasonable concerns. And again, as I said, I think that the extension of the mutual fund deadline by the previous commission, not the current commission, but that was very little to do with technology and a lot to do with, you know, maybe vested interests or powerful interests. But I think that as far as I think it's very important to have a stable set of rules, and I think that this new BSEC chairman and commission are very proactive in terms of, you know, they're very proactive in terms of intervening to ensure that companies comply, even merchant banks and intermediaries comply. And I think, you know, I think that we have to give credit. I mean, it's very early in the new chairman and commissioner's term, but I think nobody can dispute they're not proactive. So I think that kind of proactivity is very important to send the right signal to all the key stakeholders in the capital markets that they have to comply. And if there is non-compliance or lack of transparency or bad governance, there will be consequences. So I think that's one thing that's very, very important. And I think that's good. But I think that, you know, the issue is we have to also get good quality companies into the marketplace. So many of these new tech companies that are coming, a lot of startups that are NSU, a lot of startups that are founded by NSU alumni, Shop Up, Nogod, and others. We have to make sure that those kinds of companies come to the stock market. I mean, the stock market is very heavily weighted to a few GP, some banks, very good high quality tech companies or high quality consumer companies in the stock market. So we have a supply problem. But if I just conclude by saying, I mean, you know, I was speaking with a stockbroker yesterday, and I was saying, in 5 to 10 years' time, what is the vision about getting 5 to 10 million investors in the stock market? Well, I think one of the, you know, if you think maybe it's in 5 years, it's overambitious, maybe it's 10 years, but I think that I can see a world in 5 years' time where the rickshaw driver is investing in the stock market or mutual funds. So, so we basically, when you have a rickshaw ride, you will pay for your rickshaw ride using, you know, your mobile phone, and that money will go, rather than giving him 50 taka, that 50 taka will come from your mobile phone. It will go into a mobile wallet the rickshaw driver will have, and maybe in a day, if he makes 100 taka or 200 taka more than he expected, that 100 taka will be swept into a mutual fund, or that 100 taka will go into a savings account, or that 200 taka will go into health insurance. So micro investing, micro saving, micro insurance integrated into digital wallets is a form of fintech innovation that is very possible in Bangladesh. And once you can have some of these things, that's how you will have more investors coming to the stock market. In terms of confidence, I think that the the stock market or the capital markets trading center that Professor Hannan is proposing, that will give students greater confidence about how to trade the stock market with a shadow portfolio and how do they manage risk. Stocks go up, stocks go down. How do you analyze stocks? Have good fundamental research to analyze stocks, and how do you manage risk? So I think we can also get our students and people comfortable with risk. Stock market trading games are important as well. So having high quality games. So I think there's a range of things. I won't go on for too long because I want to make sure other people have time to.
I wanted to ask you the second question, and that was about my students actually. How can we just get our student to know in a non-technical fashion, probably, because a lot of it is very technical. In fact, the infrastructure is very technical, but its application is certainly not. Probably we can convey that to our students. So how can we get our students introduced to this fintech arena or fintech area? So that is one worry. Actually, I'm thinking of introducing a course, but is it a feasible proposition that we introduce them to the concept of fintech?
Yeah, Dr. Arif, I would like to share actually. Yesterday, Ifty and I, we were actually talking to the fintech chair or co-founder of Fudan University. He is an MIT graduate and, he's a technical guy. But his experience he shared with us, according to him, that most of the Chinese students do not have, heavy mathematical and also, language understanding, programming understanding, but they are teaching it in a way the technical part, engineering part is not their part, but the business school student understand the uses and also in the front line, how this business goes on and the opportunity goes on. Those things they teach in a very, very, articulate way.
That's
He said
comforting,
that,
yeah.
yeah, he said that he's going to share us actually those techniques or whatever they do in fintech and center at Fudan University. If we go for it, actually, they are going to give us those support eventually. My point is actually, I would like to see that, well, fintech is an emerging area, and obviously the world is heading towards that. We cannot, we simply cannot say that, well, in future the businesses and transactions that are not going to be heavily technology oriented or technology incorporations is not going to be there. It is going to be there, and just because we understand that part, let us try to do something in our business school so that at least we can say that, well, our student is exposed to that arena, and with a basic understanding, they are going to start and we are going to start. Obviously, I understand that technical part, we really need to incorporate technical people in the team.
But if you can integrate with other departments like CEC,
yes,
then students can get together and
led by business school everywhere. So yesterday even I saw that, well, Ifty is actually chatting with one professor at Oxford. He sent me the chat also. He's also another guy who is running the center or that arena in Oxford, okay, Syed Business School. Everybody's comment is pretty much the same. Not every students in the business school are going to be highly technical or heavy math oriented individual, but they have given an understanding. We have to understand that we are not giving them engineering education or heavy skill programming skill. Of course, we are going to give skills that are essential. So we have to narrow down our objective. And it is sure that in Bangladesh also, company like Bikash and Nogod and Rocket, that, many things is happening even in fintech arena. So how those business is actually evolving and flourishing, I mean, huge transaction is going on. We know that despite being all regulatory, barriers and technological barriers and adaptation barriers and awareness, things are moving slowly maybe, my point is from the academic point of view, are we going to give that flavor to the future generation of the student in our campus so that we can actually be a first and, you know, forerunner about, you know, about these things, you know, this.
If I can just add something else,
That is
if I
what
can add something else, Anandbhai, because I think Professor Arif makes a, you know, I would say a mission critical point. You know, this is an objective for 2020. So firstly, it's kind of this, today is an information overload because as I said, I'm effectively giving you 12 to 15 lectures in 45 minutes. That's why there's so much information. But what I can commit to doing is I will break all of this down into 12, 15, 20 lectures, bite-sized, which I will give jointly with each of you. I mean, as much as I can time-wise, maybe on Zoom as well as in person next year. But simply put, I have to, if I cannot, we have to connect and resonate with the least technical student. If we overwhelm students or anybody with over technical discussion, there's no point in them sitting there. So I start from first principles. Why is this relevant for you? I don't care whether you're a marketing student or you're an AI student. Yes, if I'm speaking to Professor Sung or each of you, we'll have a certain level of conversation. If I'm speaking to a BBA in marketing, it'll be a different conversation. If I'm speaking to an economist, it will be a different conversation. So I think that there's no excuse. I certainly would never, I would fail if I speak to a group of students and they sit there and they don't understand what I'm saying. I have to look into their eyes and make sure I can sense that they're engaged in the discussion, because it's a discussion. We have to make the discussion relevant to the students and pitch it at the right level. Yes, maybe for MBA students or more research-oriented students, there may be a separate discussion. But I think the core FinTech teaching program needs to be done at an appropriate level for the core BBA student base. So I think that's some of the work that we need to work together when we start preparing the structure for the proposed teaching program.
Hopefully we'll do. Yeah.
Yeah, I think that's great. Thanks, Ifty. Thank you very much for that. And we are looking forward to have that kind of sort of thing, so we can actually plan for our students to have some kind of course here at North South University. And with this one, thank you for your nice presentation. We have lots of information over there. And I just like to thank you for your nice.
Yeah, Ajim.
Yes.
Is Toby from China would like to share his any experience or anything? Toby from China, from
Right,
Kingdom
Toby.
Finance.
So actually, as Kingdom as a core technical provider to China fintech market, so Kingdom has a lot of practice actually. So university we are study and doing the research, but Kingdom as a company we have the practice. So we want to share some success cases to Bangladesh, to your university, and let's design how we deliver some success cases to let the student to study how to develop such product in Bangladesh or in other countries.
All right. Thank you, Toby.
This is my comment.
So one other thing I was going to say before we finish up is that I think one of the important things to engage with the BBA students in particular, or even MBA or even executive MBA, is we have to have that blend between, yes, more interesting academic or technical discussion, but also we have to have interesting case studies which students can connect with, and we have to have good, interesting and dynamic external presenters who will get the students excited about fintech or about the digital economy opportunities or innovation and so on. So again, that's maybe that's for a future discussion, but that's going to be very important to get that balance right to make this successful.
That's right. And if you can share the slide, sorry, you can share the recording with us, so I can probably share that one with our colleague at North South University.
Sure, I'll send that recording and feel free to, and there's nothing proprietary, you can share with your students as well. Maybe they'll feel a bit more connected, or I don't know, unless you think it's more of a faculty discussion. But I think, in general, engaging, I'm always optimistic. Even students who don't seem like they understand, I think that more students, once they're interested in something, many students can get themselves up a learning curve quite fast, as long as they think it's interesting and relevant for them. So that's one of the big challenges.
Great, thank you.
Okay.
So with the permission of our team, can we conclude this session for today?
Yes, yes, we can actually wrap it up. Thank you very much, Ifty and Tovi and all my colleagues for participating. Azim, you can close now.
All right, thank you very much. Thanks for joining the session, and hope to see you again in some of the next sessions.
Thank you again.
Bye,
Have a
everyone.
good day. Bye-bye.